Here at the Canadian Club, we have always been a forum for public figures, thought leaders, and decision makers to share their ideas and inform the most relevant and compelling conversations of our time.
We are dedicated to encouraging debate on the issues that matter to this city, this province, and this country.
The Canadian Club is one of the most important podiums anywhere in the world that a Canadian can speak to, tell Canadians what it is that they think, develop those thoughts. And so I want to thank you for that very, very much.
Please join me in thanking our esteemed panelists today.
Through our programs and events, including our youth and young leaders programs, our diversity partnerships, our joint events, and our media and social media opportunities, we offer you access to dynamic political, social, and business figures from abroad and right here at home.
The platform from which the eloquence of Canada has flowed all of that time, whether it be business, education, politics, sports, arts, and culture. If someone wants to say something to Canadians about this country and about the future of this country, this is the venue you choose.
Good afternoon, Canadian Club members and guests. I am delighted that you're able to join us today here in person, as well as obviously online. I hope that everyone in the room enjoyed your meal and also had a chance, well, given the banter, obviously people had a chance to reconnect with your network and hopefully expand it as well. My name is Joseph Lowe, President of Canadian Club Toronto, and I am thrilled to be your host today. I appreciate those of you who have taken the time to join us online, thanks to the AV services of Van Valkenburg Communications and livemeeting.ca. Certainly, in keeping with the times, our club is happy to welcome our audience digitally, as well as, of course, here in person. We are also deeply appreciative of the generous sponsorship provided by Tories and Hill & Knowlton Strategies, making this event possible today. And thank you. And thanks as well to our season sponsor, Canadian Bankers Association, for its continuing support of our club's mission. I would also like to take the opportunity to welcome a table of young leaders joining us from Toronto Metropolitan University, supported by Canada Life. So guys, please stand and be acknowledged. It's fantastic to have young leaders like yourself to be part of the conversation today. I'd also like to thank Canada's Forest Trust, an ESG company planting smart forests to take action on climate change with the power of nature. I'm pleased to share that our partnership will reduce the carbon footprint of our entire season of Canadian Club Toronto events. The TMX Group CEO is a highly sought-after subject matter expert on the capital markets, finance, regulatory affairs, and according to a recent Globe and Mail article, he can tell you a thing or two about wine as well. I'm sure we're going to get to that. What questions do you have for our guest today? Please use the Q&A cards that you're going to find on your tables. We'll get them up to the front to our moderator to have the questions addressed. For those of you joining us online, hit the Submit a Question button on the right-hand side of the screen, and we'll get your questions that way as well. And now it's my pleasure to introduce our speaker. John McKenzie is a TMX veteran and was named President and CEO in 2020. While you're likely most familiar with the Toronto Stock Exchange, the TMX Group operates a platform of global markets, digital communities, and analytics solutions for its clients. Its portfolio includes the TSX, TSX Venture Exchange, TSX Trust, Montreal Exchange, TMX Data Links, and TMX Insights. John is intensely proud of our nation's vibrant capital markets and has been focused, very much so, on attracting more public listings to our shores. His results are nothing short of impressive, adding hundreds of companies to the TMX umbrella since becoming CEO. Today, TMX Group ranks third in terms of new international listings, behind only the New York Stock Exchange and NASDAQ. Joining Mr. McKenzie in conversation is the Globe and Mail senior business writer and columnist, Rita Trichur, an award-winning journalist. Ms. Trichur joined the national newspaper 6 years ago following her tenure at the Wall Street Journal. John, Rita, it's my pleasure to present the Canadian Club podium to you.
John, I understand you want to tee us up with some remarks?
I had a number of things I was going to kick off with, and then actually Joseph took most of them for me to make it even easier, so I do appreciate that. But let me at least start by thanking you, Joseph, Colleen, the rest of the Canadian Club team for making this opportunity happen for us today. Because for all of us at TMX, our team was working so hard to get the message out about the criticality and the vibrancy of the Canadian capital markets. And I like to say, and we chatted earlier, that it's, people think it's a Bay Street story. And so I'm going to apologize to everyone who's Bay Street here. It's not about you. TMX is a Main Street story because what we're really about is actually helping those companies raise capital, expand, grow, hire. And we've been, for 170 years, an engine of the Canadian economy. If you think about that track record, we actually just celebrated our 170th anniversary a couple of weeks ago, which makes us one of the oldest institutions in the country. And with that, financing all the companies that built Canada, the railway companies, the resource companies, the telecoms, the finance sector, and even more so today, the emerging tech companies that are going to build that next generation for Canada. And so you had mentioned a couple of the pieces that we operate on behalf of the industry, and I'll just reiterate them. TSX, the Toronto Stock Exchange, TSX Venture Exchange, which by any means and any measure is the most successful venture market in the world, and we will stack that up against anybody, and it's something that Canada can really be proud of. So one of the things I am going to do, and we're going to try to do as we go across the country, is take off the modest, apologetic Canadians in us and actually pat ourselves on the back when we do something that's world-leading, which is what we do with the capital markets. We operate the Montreal Exchange, CDS and CDCC, the clearinghouses for the country, and with that, we really are those platforms for companies to raise capital and grow, for investors to be able to trade and interact with traders, but also the core systems that do trading and clearing and payments infrastructure for the country. We did one other session last week, been doing this across the country, and one session in Montreal, which was at a FinTech conference. And I iterated there, and I'll iterate it again, that this is actually a technology-based business. It's not the exchange of your grandfather. And it makes us the oldest FinTech company in the country, with a rich history that TMX and the market participants we work with have been so critical in marketplace innovations that have been adopted around the world. This was the first market to go electronic with computer-assisted trading. This was the first market to go all electronic. This was the first market in North America to actually become a public company on our own exchange. This was the country where we invented the ETF. ETFs are now the fastest growing trading tool of retail investors in the world. We invented them here. And if you even think of more recently, first market in the world to list crypto on an ETF. I don't know if that's the best topic after last week, but again, it's that showcase of the innovation that collectively we, with all of our industry partners, bring to the capital market. And so that's why we're so glad to have this conversation with you today, because we really want to get that message out, that these markets are something for Canadians to be proud of, and something that we should be fostering as an engine of the next generation of growth for the country as we go forward.
Excellent. I should tell everyone that when we had our prep call, John said to me, you can ask me anything, and I like that you push me out of my comfort zone. And I thought to myself, in my 24 years of being a journalist, nobody has ever said that to me before, certainly not a CEO. But I appreciate the commitment to transparency. It's so important. Tell us, John, about your national engagement tour, because you've been on a national engagement tour. Why now, and what have you heard from stakeholders from across the country?
Well, one of the reasons why now is because for the last 2 years we couldn't do it. When I had the opportunity to pitch for this role and to put forward a vision for the organization, it was very much grounded on that belief that this is a core institution of the Canadian identity, Canadian growth, and Canadian champions, and wanted to reinvigorate that role we've got. We'll be frank, we're in a position of both privilege and responsibility, our team, to get to lead this organization. And with that, we believe that we've got to be the ones that are going to champion this market. Because if we don't, who else can we expect to do it? And so that was the whole intention. We wrote a new purpose for the organization, which was we make markets better and we empower bold ideas. And it's the bold ideas of all of you, especially you guys at Table 11. We want to empower and finance all your bold ideas going forward. But that's very much what we're here to do. And getting the roadshow out has been going to talk to all the different communities. In Calgary, we talked to a lot of the energy financiers about what can we do to help raise the national voice around financing this sector. We spent a session with the mining executives in Vancouver about the unique needs that they had and what we could do to streamline filings for them, so things that we can do better, but also where we can advocate with regulators to make things easier for them. Similarly in Montreal, and talking to the tech sector, what can we do to help the next generation of tech companies be able to raise capital? And as much as this is a two-way speaking piece today, I got a great piece of career advice that I always like to reiterate. And I was told, John, you've got 2 ears and 1 mouth. So twice as much listening, half as much talking. And that's what we're trying to do across the country, is listen to the stakeholders so that we can come back with recommendations in 3 simple areas. What we can do better ourselves to run this market more efficiently, more competitively, where we can advocate with regulators to take away some of the burden in terms of what it means to be a public company, and then where we can engage with government to ensure that public companies get a fair treatment, a fair access to capital. And that'll be the next stage, and we do that next week.
Okay, so I have to talk to you about current market conditions.
Yes.
Equity markets have been volatile since the start of the pandemic. First they were down, then they were like shooting way up, and then they came down again, and they were kind of coming up a little bit. And there's still a lot of concern and uncertainty, concern about climbing interest rates, the dried up deal flow, tech privatizations. I mean, there's a long list of concerns. What are your concerns about the current market environment? And also, are there any bright spots?
There are a lot of bright spots. So thank you, Elise, for finishing with that piece and that setup. Certainly, we share those concerns. When you've got a marketplace, not just with interest rates going up, but what the volatility that creates. The challenge on doing deals is not the interest rates themselves, it's the volatility that can a company get comfortable that they can price a good deal with certainty. And certainly, exactly as you said, we had a number of deals that were in the pipeline early in the year that didn't come to market. The flip side of that is that when the market conditions are stabilizing, when certainty prevails, and some companies can show they can get good deals done, every market before this has shown that these deals will come back. And beyond that, when you talk about the silver linings, we've actually had some sectors that have some phenomenal years. And so the energy sector, while it's not doing a lot of financing transactions, of our TSX 30 that came out this year, virtually half of them were energy companies that have had a really strong performance. And that's giving them the ability for private companies now to actually go to the public market where they haven't in probably the last 5 years. We're seeing continued financing in the mining sector, particularly around critical minerals. Critical minerals are key to the transition economy for battery making, those types of things. So, it's taken an industry that was much more of a traditional bricks and mortar industry and bringing it into the new generation. So we are seeing those types of opportunities as well. But the last piece in terms of the silver lining, I mentioned in my opening comments, the TSX Venture Exchange, if you don't know it well, you want to learn about it because there's no market like it in the world where we can support a company doing a public company capital raising transaction at the early stage. And quite frankly, that's less sensitive to these market dynamics than it is for a big deal. Because a lot of those deals are actually sponsored. They're an intersection between private capital and public liquidity. So we have a program called CPC, the Capital Pool Company Program, and we've had over 150 new capital pool companies go in the last just under 2 years since we relaunched the program. And we've been active in doing these companies and these company transitions this year, despite the market activity, because they're backed by sponsors that are serial investors that know how to bring companies forward. So that's part of the bright light. And if you want to see how it translates into the metrics, despite the headlines on kind of no IPOs, we are up in the number of public companies on TSX and Venture again this year for the 5th straight year. And we are the only major market in the world that's got that track record. And that's thanks to everyone who's engaged in the industry that's helping these companies go public.
Okay, so I'd like to chat a bit about the lessons you've learned throughout the pandemic. And I want to take you back to February 27th, 2020. The Toronto Stock Exchange's system failed amid the market panic about the novel coronavirus. We were still calling it that back then. But improving resiliency became a priority for the TMX Group. But then earlier this month, there was another outage. What happened, and what are you doing to prevent such occurrences in the future?
Yeah, and that's a fair question because let's be candid for a second. We do operate some of the highest speed, lowest latency, most complicated technology systems, not just in this industry, but in any industry. Speaking of technology systems, I guess I was the only one that meant to go to silent mode today. These systems, in the case of what happened even 2.5 years ago, we saw record activity coming through the market, and at one point we were seeing more than 10,000 messages come through our system per second. And what happened then, and even what happened a couple of weeks ago, is a unique activity that simply was something that hadn't been tested that created a technical issue. Our track record in terms of actually uptime is among the best in the world. We talk about it kind of like 99.995% uptime. The challenge is when you are as public as ours, that 0.05, it really sucks. Because our clients are impacted, we haven't met our expectation in terms of how we want to support those clients. But this is an area where I really want to give a lot of credit to both our team and our industry partners, because what we demonstrated with this challenge is that we could fail over the market, we could move it to a backup site. For those that don't know, we buy 2 of everything. We have a full redundant backup of every piece of core infrastructure for the Canadian market. And the first time in 20 years in a live market, we actually failed over and started to run in that backup facility. And I know Luke is making sure I get this right, in 64 minutes flat. And the feedback from the industry was, while they never want us to be down, impressed with how quickly the team was actually able to get the market up and running again, normal operations, close the day out appropriately. So that was part of the lessons learned, because the things that we learned earlier in COVID led us to an 8-figure investment back into our systems to build more resiliency into them. And it's that resiliency and those tools that we used to fail over the market quickly. And so the industry could get back up and running again. But I've got to put the thanks out to all of our industry partners, because you can't restart unless the whole industry is ready to go. And they test with us multiple times a year how to do this, how to fail, how to go to backup, and how to get the market restarted. It's kind of like a dress rehearsal for a wedding. But we do it multiple times a year. We test different scenarios, and when it happened in a real life scenario, we're able to fail over, fix it, and move on. And that's our commitment to the street.
Okay. The pandemic also took a toll on entrepreneurship in this country. Small businesses in particular bore the brunt of the economic shutdowns. When the entrepreneurial spirit is damaged, fewer companies go public. And long before COVID, there was concerns about shrinking stock markets and the thinning ranks of public companies in this country. How do we revive entrepreneurship in Canada?
And this is where we love to talk about venture. Because even before the pandemic, and I got a question once from a reporter about, how do we think about the reporting on the decline of public companies? And I said, I don't know what numbers you're even looking at, because the venture market is continuing to add new companies every single year. And the point I made earlier, we actually year after year actually growing the company base. And the reason this venture model is so important is because of what it allows entrepreneurs to do, and where we try to work with them. What a lot of people don't know is for the 14, 15, 1,600 companies that are on the venture exchange, we have 1,600 companies that are private companies today that we're already talking to. So we're talking to these entrepreneurs before they ever go public, so they understand what can the public market offer them in a capital raising solution. What are the ways that we're going to help them, the way that the industry partners are going to help them to meet those expectations and really de-risk this process for them. Within that company base, 1,600 companies that we're talking to, of the ones that do list with us, over 700 of them have grown up, graduated, and become TSX companies. So we've got this track record and history of incubating small businesses, scaling them up to a successful company where eventually they are a S&P TSX listed organization, S&P index company. And that's why we need to get out and reinforce it and use the tools that we've got available to help those young entrepreneurs understand what those options are, particularly in a market that looks tougher.
Okay, so that's my next question. Why would a company, an emerging company, choose a public listing over staying private? What is your message to those entrepreneurs?
And it's going to be a different decision for every company. We don't go out to say every company, the only right path for you is public. But what some companies will find is that, particularly when you're in that growth stage, And anyone who's run a company that's been privately financed before, it's not always easy getting your second round or your third round. And the amount of control that gets given up to the private financiers in there, it's not the panacea. And so when you're actually doing that with the public market and you've got the ability to come back to the market for multiple capital rounds, in some cases it actually can let those founders keep more control of what they're building and build a broader shareholder base. The other things, I mean, whether or not you're going to get a better valuation in private or public is going to depend on the industry, it's going to depend on the time frame, it's going to depend on the deal. But that's why we always suggest for companies to be really successful at it, it's not just about the deal that get done. It's about coming to market, it's about doing the investor relations work and curating those shareholder relationships over the long term so you can come back and raise more capital in the future. And that's key. It's not, I saw writings in the newspaper. I'm not going to pick on newspapers here. But in the fall last year, we had a lot of large tech IPOs. We would get articles that would say, this IPO has failed because it's down from when it went listing 6 weeks ago. And that's like saying that your child isn't going to develop because they're 7 months old and they haven't walked yet. Let's judge the success of that company based on what they do with the capital they raise over the long term that they're building the business out. Did they expand as they said? Did they actually do the acquisition? Did they hire who they needed to? And let's judge them in the long term, because that initial deal is the start of the journey. It's not the finish.
Okay, now the question that I've been dying to ask you.
Okay.
What are your thoughts about the federal government's proposed 2% tax on corporate share buybacks?
My team will accuse me sometimes of taking off my glasses when I'm going to start ad-libbing, rather than reading the text that I'm supposed to use for certain things. But today I forgot my glasses altogether, so I'm going completely transparent with you. This is a bad policy. I can understand why governments would introduce a policy like this because it has a populist element to it and because there was a similar one in the US. But a stock buyback tax is an unnecessary impact on a company's ability to manage their capital structure. Companies look to things like buybacks, we have an NCIB, a normal course issuer bid on the exchange, as different ways to manage their capital. And it's more difficult for a company to permanently raise their dividend than if they have excess cash in a year to return some of it to shareholders through a buyback. So it provides flexibility for a company to manage their affairs. And adding a tax to one piece unnecessarily interferes with a company's ability to manage its balance sheet. And secondly, we're looking at a tax that is potentially more punitive than the comparative tax in the US. And our capital market is different. We have over 3,000 listed companies. 2/3 of them are small and medium enterprises. They are not big US companies. And why would we ever want to take away a balance sheet and a capital management tool from small cap companies that are still trying to build their business? And then the last piece I'll add to this in terms of policy is, why would we put a tax in place that only applies to public companies? Again, you mentioned it earlier, public isn't right for everybody, but when we do that, we add another friction point to companies being able to raise public money. And sometimes I get asked, well, why do you care if a company is private or public? A public company is really the only vehicle where broad-based Canadian shareholders actually get to participate in the growth and success of those great Canadian names. That's the real democratization of investment. So we should be wanting to see more of these companies come to the public domain so that everyone actually can participate with them. And changes like this buyback tax is just another challenge for a company to raise public money.
I see a lot of people nodding their heads, so you have a lot of agreement in this room. Okay, I want to stick with that same theme of how governments can help better support public markets. You know, what did you make of Ottawa's recent decision to order foreign state or owned companies to divest their shares in Canadian mining companies?
Yeah, and that one's difficult, and I actually understand the perspective on it. Where I lean to on policies like that is companies do require certainty. So whether or not we're going to allow some types of foreign investment in or out, that's fine. Make the decision, make it clear, and so that companies can actually raise capital with certainty of where they're going to get it from. Disrupting companies that are already raising capital, not effective. Certainty is the biggest thing to help capital flow. And when you have a lack of certainty, either because of policies that change like that, or even in the case of things like the energy or the resource sector, you've got companies that would love to develop, but they can't get certainty on consultation in their industries, on whether or not they can get approval for their projects, whether or not they can get infrastructure to them. When you don't have that certainty in place, you're not going to raise capital. The capital is going to go somewhere else where it's got more certainty. So that's my view on that piece. But I understand the challenge that the government has on that type of foreign investment.
And is there anything else on your regulatory wish list that you think that we could do to reduce the regulatory burden for public companies? What else would you?
We have a long wish list. So and again, it fits into three things. We have things that we can do ourselves. So we're actually engaging with the industry right now. We've got a program called Venture Forward. I would encourage anyone to have a look at Venture Forward. It's about us taking a white sheet of paper to how we actually operate the market. What's the rule set for being a public company? And to look in there to what can we do more efficiently to ease the burden of a company applying, raising money, doing those types of things. So those are in our control. And to make changes, we'll need regulatory approval, but we'll make the case to do that to make the market more efficient. We have a whole host of recommendations around regulatory reform. And the recognition is not that there are regulations that are bad for the public market, but there's the impact of cumulative regulation over years that adds burden to anyone going public. There are regulations on the books around disclosure that were written before the internet existed. We can probably modernize those and make it easier for companies to do disclosure. We've got different things that the CSA has actually just brought out in terms of prospectus reform, and bravo, we support the work they're doing there. We've made the case that maybe it's appropriate to allow our smaller cap companies to report twice a year instead of 4 times a year. Their stories don't change every 3 months, and certainly they don't have the resources to do that, so let's get them focused on building their business and less on quarterly reporting if it's not meaningful in their industries. So those are on the regulatory side. At the government side, we've got some what I'll call really discrete recommendations, again about making fairness for public companies central so there's not an incremental burden to raising capital. And a couple of really simple ones I'll leave with you. R&D tax reform. Tax credits for a small cap private company are substantially higher than a small cap public company. The companies can look exactly the same business, competing with each other, same size, but if they're private, they get a larger R&D tax credit than they're public. It doesn't make any sense. It's just legacy, so we're hoping to get that fixed, and we are getting some listening and engagement on that particular file. Separately, we've actually talked to the government about sectors that they want to build. They want to build out the clean tech sector. They want to build out the clean energy sector. So our recommendation over the last number of years is look to the flow-through share vehicle that Canada used to build the traditional energy sector. And what this vehicle does is very simple. It actually makes it so that a company can flow through their losses to the end shareholder, and that allows the shareholder to de-risk the investment they're putting in because they don't have to wait to potentially crystallize those losses. And when you've got a new sector, like anything around clean tech, carbon capture and storage, clean energy development, these are capital intensive, they're risky. So if the government can use a tool that de-risks investment, capital can flow in our country to do that. So I like to do these things like they don't actually cost the government anything. The cost is the policy change so that the private sector can finance the things that they want to build. So those are a couple of themes that we're working on.
Okay, so I want to pivot and talk specifically about TMX Group. You were appointed CEO in 2020, and you were immediately faced with a big challenge. You had to fix the culture of the organization. I'd like you to tell us about that experience and where you are and about your progress to date.
I'd like to say that we fixed the culture because a lot of our team members, our leadership team members are here today, and it's been a collective effort of all of us. And there was really a recognition that our organization, like so many of before us, went through a lot of change, a lot of acquisitions, a lot of integration and restructuring, all through kind of 2016 to 2020. It was all important. It needed to get done, but it also left the organization with some organizational shock. A lot of team members had moved on, some concerns about the culture, some toxicity, and so it was an opportunity for us to take a fresh look of what is the kind of company that we want to be, and then really almost at the same time, as you said, the novel coronavirus hit, and we went to this place where we're actually now asking all of our workforce, like so many organizations, to go work from home, but in our case, operate critical pieces of market infrastructure that can't go down. And the engagement from our employees was phenomenal. Because the people in TMX are so committed to the purpose of running these markets and what we do for the industry. the opportunity for us as a team was to really harness that engagement, build a culture around much more openness, transparency, flat organization, more communication, and a simple hiring policy that's not written down in any manual, which is no assholes. The fact that this is a business that built out of the capital markets doesn't mean that that's the culture we need to have. This is a culture that only succeeds if we can work as a team, because we're not that big as an organization to succeed otherwise. We're big in terms of the center of the marketplace, in terms of the impact we have, but we're only 1,600 people globally. And we've got to be able to work effectively across different parts of the exchange, different parts of the world, to be able to get success out of that small group. So that's really been the journey, that focus on being a people-first company. We brought in some great new talent from outside as well. And I remember the challenge that we gave to some of the new leaders was very simple, which is this needs to be a top 50 employer to work for. And it needs to be a top 50 employer to work for, not so that we get a badge that we get to put on the wall, but it means we've done the right things around employee engagement, communication, work-life balance, that it's a place that people want to come to. And we're not there yet, but we were named this year top 100 in GTA, and we were top employer in London as well. And we're going to keep moving that needle so that even though we are smaller than some of the ones we compete with, this will be a top company to work for, because all we need to be able to continue to grow and build the next set of solutions for the market is to have the right talent in the organization, both the talent that we want to keep, but the talent we want to attract. So it was core to redefining our strategy, which is not just about growth, but about growth, talent in the team, and advocating for our clients so that we can all have that shared success.
Okay, so corporate culture, want to stay on that theme. Diversity and inclusion is a very important part of that. I'm going to ask you the same question I asked John Graham when I was interviewing him here. What's it going to take to create meaningful change in corporate Canada and in our capital markets for women, for diverse candidates, for Indigenous people? People like me grew up in Canada, born in Canada, and we were told from a very young age, be patient, be patient. I am almost 50 years old, and I'm all out of patience. And so I really want things to be better for the next generation of Canadians. What's it going to take?
Well, 50 is the new 40, so but that helps. This is about collective willpower, and I don't think we need to be patient anymore. We're actually starting to see actual real change. And where we're seeing the real change, if you look back even 5-6 years ago, women on boards of TSX listed companies or the big companies, the TSX composite index companies, 24% in 2016, 36% in 2021. That's not there yet. But for the first time ever, we can actually say we got halfway to halfway. And some of the biggest drivers that are making a real impact is it's not actually government policy. It's not actually regulatory reform. It's investors and their advocates voting with their feet in a way that we haven't seen in the past. So large shareholders, large asset managers that are taking on ESG mandates that are both around the environmental performance of a company, but also the diversity within the organization and how they support their people. And the organizations that support them, like the Glass Lewis's and the ISSS's of the world, which quite frankly will now recommend that shareholders vote against a governance chair if they haven't made a target around diversity, and if they haven't met it. And if you want to motivate board members to change, you vote against them. So that, I think, is one of the biggest changes in the environment in the last 20 years that we've talked about it, because there are actually real consequences of not making meaningful progress now. We're also continuing to think about, what can we do, and in that scope of making markets better, to help advance this even more. That's why we do ESG 101. We actually work with public companies. We train them on what does it mean to be a good ESG company? How do you do better disclosure? How do you report against SASB? How do you report against TCFD? How do you show good diversity metrics? We've thought, is there an opportunity for us to provide better disclosure tools? So we've actually launched a disclosure portal so that companies report against it and get that disclosure out. And I think this is an area where we and the CSA regulators can do more. Disclosure is the light that shines on it that actually gives the ability for stakeholders to take action. So the more that we can help our companies give standardized disclosure around how they're doing on diversity in the boardroom, diversity in their executive ranks, it gives the ability for the asset managers, the pension funds, and all those stakeholders around them to actually hold them accountable. And that's what makes change, is actually holding people accountable.
Thank you for saying that. we try at the Globe and Mail.
So you keep holding us accountable.
Okay. I want to talk to you about Indigenous reconciliation. When I talked to you about this issue, I think it was a couple of years ago now, or almost, you said to me that you're setting the floor, not the ceiling.
Absolutely.
And so maybe you could share with those who are not familiar what you have done to date on this issue, why it's important, and what you plan to do next.
Yeah, I'm happy. We're about, I'd say about a year and a half into the journey. And sometimes the term journey gets overused, but I think in this particular area, it is actually the right way to think about it. One of the very first things we did was get engaged with CCAB, the Canadian Coalition for Aboriginal Business, got engaged in the Progressive Aboriginal Relations Program with them to help define what's the right strategy for us as a company, us as an industry, to make a meaningful movement to engaging Indigenous people and Indigenous business into what we do. And that was really important. And what I love about the program is it's actually a 7-year program. So it's not about doing a few things, you get a check mark, and you move on. And so what we've been doing as an organization is a couple pieces. So we are working on how we actually do better Indigenous relations ourselves. One of the first things that we've been able to do in terms of using our platform, though, because we're a very unique organization, is using our TMX Money platform, which is one of the busiest sites in Canada for people looking for investor information. We now make available on that every company listed on our exchanges that is a PAR committed or a PAR certified company. And you made the comment of that being, it's the floor. And the reason it's the floor is once we can identify companies that do really well in this regard, now we have the data set for an organization that wants to build an index on it, or can you build an ETF on it? If there's investor demand that they want to be able to invest in a product that showcases companies with good Indigenous records, we can eventually create a product to support that. And that uses the infrastructure of what we're good at. So what we wanted to do when we came to this was not do things that were performative, but do things that were unique to our role in the capital markets to actually make a meaningful difference. So the long-term view is we look at 10% of the Canadian population who largely is not engaged in our capital markets, who actually do have capital deploy. We're starting to see more land claim settlements, they've got capital to put forth, and it's actually the largest entrepreneurial class in the country. So what we look at is how do we use the tools of the market, the tools of the exchange, like the venture exchange, like a capital pool company program, or in this case, maybe construct a new structure that would allow an Indigenous company to raise public money and retain control to build their business and support their communities. So that's the vision that we're working on, and Louis and team are knee-deep into this now in terms of how can we create that right company structure that allows a company to raise money and actually be the owners of their own opportunity using the things that we're already good at in the market.
That's fantastic. Okay, I'm going to get to the audience questions in our remaining minutes.
Okay.
How do you think we can grow more unicorns in Canada?
Did you anyone see the unicorn on the ceiling? And if you took the inspiration on that. This is an area, one of the things that's really interesting around growing unicorns is we can actually bring, as a team, we can bring more companies to market than we can currently get the market to support. So this is actually one of the things that we all need to collectively do is actually engage more investors and more capital into the community. When we start building relationships with other regions, the reason we do global development as well is to try to attract more capital into the Canadian market. Because we have the technology businesses to potentially scale and be those next unicorns. But we need to have that support of the investing, the independent dealer network, the capital contributors, the investors, the analysts, the whole ecosystem to support that growth. So that's the collective effort. And when we go on the road, we're actually trying to do that more, where we actually take our business partners with us from the community so we can build those relationships and bring more capital into the country. But that's what it's going to take. What we want is the local investors here, both private equity, institutional investors, retail investors, to be able to support these companies the way they do in the US so that they can grow and scale here rather than just sell out to a US tech behemoth instead. Because when that happens, the IP leaves, the jobs move south. So that's the impetus for us to support those from an investment standpoint in Canada.
Okay, so this might sound like a strange question given the news in the last couple of weeks, but are you planning to launch a crypto trading platform?
I think the news of the last 2 weeks shows exactly why we should.
All right, wasn't expecting that.
Well, there you go. This is why this makes it interesting. I mean, what a lot of people that have followed the space for the last while have realized that organizations that call themselves crypto exchanges, and I really don't like hearing that word used, because an exchange is actually, it's got a lens of regulatory to it. It's got a lens of validity and transparency and disclosure that none of these crypto markets had. And we've actually been calling out the challenges in these markets for a while in terms of when you've got, as an independent investor, your assets aren't even held in your name, they're held in someone else's wallet. If they go bankrupt, who knows if you get your money back or not. The ability for them to shut down trading for 11 hours. None of that would be allowed in a regulated securities market. And there's no reason why investors shouldn't have the same protections in those assets that they have in the securities market today. So this is an area where I think the Canadian regulators, the OSC, the other members of the CSA have actually done a phenomenal job of being on the forward edge of regulating crypto markets and ensuring that any market that's being made available to Canadian retailers actually is IROC regulated, that they're properly capitalized, that they've got the proper transparency, and so good on them. Where I think we can add value, and the piece that I'll add, there'll be the question mark on this, is whether the opportunity continues to exist in the future and the clients want to do it. But there's no reason why we couldn't make things like Bitcoin, Ether, actually tradable on the exchange, centrally cleared through the infrastructure that we already operate for the marketplace. The feedback we get from the industry, particularly from the large institutions that would like potentially to make these assets available to their clients. Like if you're a big bank client right now, you can't trade this in your client account. You've got to go to one of these other practitioners. If we can do it through the infrastructure that's already in place and already trusted, then they can make it available to their clients. So that's what we're working on right now, is working on what I'll call the product case on, is there a solution here that we can use the market infrastructure to solve this problem for the industry in a way that actually meets the needs of the regulators, the clients, and provides a better end result for the end retail investor. In the meantime, don't go to a wallet, buy the ETF.
Okay.
Transparent, liquid, and regulated.
We probably only have a minute left, but I really want to get this question in because I think it may have come from our table of over here. I'm not sure. This is not a good time for undergraduate students fresh out of the university because companies aren't hiring as much as before. For students who want to start a side business, what strategy do you think they can follow to raise capital for this?
That is such a good question. I mean, the biggest challenge in starting the side business is build your network. The first rounds of capital, as much as I'd like to say we'd like to take them public right away, the first rounds of capital really come from the people that are in your network. Build relationships. There's a whole bunch of people around the room here today. Build relationships with them, because for good ideas and good business, if you've got the network, the capital will flow to it. And that's why it's the same synonymous piece when we talk about even the next generation of small companies. The reason we nurture a network of really serial founders is because they're good at doing it. They will actually take the success they do on one small company and take it to another one. So look to who is also financing small companies in a similar sector and use that as a way to build a network to bring new capital in. And if you need to, come and talk to us and we'll introduce you to some of them. Because that's the same thing with our own network. Again, I said we talked to 1,600 companies that are pre-public market. We do know, some of the networks in terms of how these businesses get financed, and I know that our people on our team would love to help and mentor and give ideas and thoughts as to where we can go. Because eventually, we're going to take you public and scale you up into that next unicorn. And so I love the question, and we'd love to be of service and help to anyone that wants that kind of guidance.
We're going to have to leave the conversation there. Thank you so much, John, for your insights and your answers.
Thank you, Rita.
Thanks.
John, on behalf of Canadian Club members and guests here today, I want to wholeheartedly thank you for articulating the case for Canada's capital markets so eloquently. The depth of your experience is paralleled really only by your passion for growing public markets. And as you rightly pointed out, we can't retreat from the important work of investing in sustainability, diversity, as well as innovation. Your leadership at the TMX Group is setting the bar for others to follow, and for that, thank you. And to you, Rita, thank you for your deft moderation, as always. A lot to navigate there, and I think I can speak for everyone in the room and online. We learned a heck of a lot, so thank you very much. Audience, before we conclude, allow me to briefly share a number of our upcoming events. On Monday, November 21st, Canadian Club Toronto welcomes a dynamic virtual panel that will address financial literacy in these uncertain times. And later in the week, on Thursday, November 24th, Anthony Osler, President and CEO of Canadian Bankers Association, will join us here to address the future of Canada's banks. Please visit us online at canadianclub.org. You'll certainly find out more about the events there, and as always, be able to find your tickets as well. I'd like to offer another round of sincere thanks and appreciation to our event sponsors today, Torys and Hill and Knowlton Strategies. Thank you, everyone, for joining us today. Take care, and look forward to seeing you soon.